Welcome to another episode of Inside the Margins, where we investigate how banks, fintechs, financial institutions, and even software companies understand and mitigate risk. I'm your host, Matthew Komos, the founder and CEO of Ogma Risk and Analytics. Today, my guest is Raza Sadiq. He works at MQube. Well, Raza, welcome to Inside the Margins. I'm really excited to have you on the show.
Thanks, Matt.
Yeah, my pleasure. So you've built your career around traditional banking, specialist mortgage lenders, and now in an AI first fintech, building the infrastructure behind modern loan origination. I'm excited to kind of get into these topics because we're seeing a lot in the US and how there's a transition in the loan origination space
Yeah.
and incorporating AI, right? Um, I think you and I share a commonality in that we understand and built legacy risk frameworks. And now we're seeing this transition into when decisions are being made more instantaneously by machines and how do we ensure there's governance and things around that. So part of what I want to dig into is, understanding how enterprise risk changes when technology is the process, when underwriting is automated, when governance has to keep up,
Yeah.
especially with venture-backed growth, which we see a lot, right? So before we get into that, level of
Yeah.
detail, could you briefly walk listeners through your career journey and what drew you into your current role at MQ?
Thanks, Matt. Well, it's really the excitement of doing something that had never been done before in the UK. And when Stuart talked about the company and the passion that he shared with me rather, what he wanted to do and how he wanted to revolutionize the mortgage business, it just seemed such a perfect opportunity that I could never, pass. I was working for a very good bank at the time, but this was something that I was very passionate about transformation in terms of seeing the how we can enable better business, better outcomes for customers, while ensuring there's a huge sort of emphasis on risk and how we manage that risk. And actually, it will educate me to manage risk better as well. And having that opportunity to do so with a firm like MQube, I thought there's no way I could pass up that option. My career spanning a few years, 30 odd years or whatever, started with
Just a few.
Citibank. It's just a few.
Yeah.
So started with Citi, and then Standard Chartered, Deutsche Bank, so the big banks, and then moved into challenger bank space as well as some regional banks, private banks. Worked for a regulator for a time as well, but this was something so unique, and had the disciplines of a banking environment and the culture of traditional and conscientious approach, but at the same time more efficient, no
Yeah.
legacy issues and so forth. So that's the background. That's why I just thought there's no way I should pass up this opportunity.
That's awesome. I mean, and sometimes it's a bit of a leap of faith to understand, getting uncomfortable maybe with kind of this different kind of focus area. What have you found to be one of your biggest mindset shifts, moving from that traditional banking world into an AI native fintech like MQ?
I haven't printed anything for the last 4 years. I can tell you that. So I've never used a printer for the last 4 years, and I thought that was crazy. So used to printing reports and policies and decks for boards and executive committees and risk committees. And I haven't printed one piece of paper since I've been here. That's one change. The other change I've been in, it's just the trust that you develop with the technology team. I've been in organizations where technology and risk don't necessarily see eye to eye in a lot of things. There's always a challenge and a contest. I don't see that happening here. That there's so much camaraderie and coordination and collaboration with between risk and tech. It just makes you feel so good because then
Yeah,
you're in good hands. Do you know what I mean? So that those are the two
absolutely.
things I would say has been completely transformative in what I've seen at MQ.
Yeah, and I think it's a necessity in a fintech environment when you're trying to move quickly and remain
Absolutely.
nimble, right? Like to have disagreement or non-collaboration amongst technology and risk would present a big challenge in actually producing a product, right? And maintaining it and being out in market. Like, I've done a lot of work with fintechs as well, so definitely appreciate that kind of different. And I think what's important, right, is you haven't, kind of steered away from those traditional risk things that you know and love and that you've done for your career, and learned how to embed it within this fast moving technology, which I think is pretty cool.
This is very cool. This is very cool. And I think the trust element, just going back to what you just said, moving away. Yes, on paper, we're always supposed to get along, right? Risk is always supposed to get along with all units,
With everyone, yeah.
but with everybody. But I've always seen where the challenge comes in is when you're talking about resilience frameworks or security frameworks. Could you do it better? And that's always the ask. Where here it's like technology is telling me we have done this and we will do this more to give you that level of assurance, which is just such a good feeling. So they're thinking
Yeah.
about risk before I've even thought about this risk, and they're educating me on some of the risks, which is fantastic because I learn from them as well. So there's a mutual respect and education that's going on both sides. Them understanding what governance means and what it looks like, whatever, but they're also telling me these are the risks that we're faced with, and this is what we're doing to mitigate those risks.
That's a great kind of learning environment to be in, where you can benefit, when both sides of the table can benefit from that learning experience, and it just makes the whole team
Absolutely.
stronger, right? Yeah.
Absolutely. It's and resilient. And
Yeah.
when we're faced with challenges or any as in the market is faced with challenges when things are coming up and we can see that's how the industry is reacting, we've got a good feeling that we at least are on top of it. If not, we're addressing it. And that is such a good because you can imagine some of the challenges that we face are the supplier management risk, and managing those suppliers if they're not run their patches on time and that they're not up to date and so forth. And we're tracking that and we're seeing some of those things happen. We're in the right, but we are still impacted by it. So that enables us to be that much more
Yeah.
proactive about it and make sure that it gets resolved. And that whole incident management process is so much more efficient here, and I've never seen it anywhere else. The way it's been done here is where we're aligned with those tickets that are raised. Those root causes are immediately addressed. They're time tracked to resolution, which is fantastic because we don't have the luxury of waiting around for something. It has to be dealt with. The team deals with it as those tickets are raised, and they're raised
Yeah.
immediately.
Yeah, they don't drag on for weeks and weeks in some kind of a
Yeah.
committee or, yeah, exactly. Well, so if you think about, this fundamental shift of moving from kind of the traditional environment into these kind of fintech situations, not only are those types of things happening quickly, but the nature of MQube, which I want to get into shortly, but right, you're helping underwriting decisions happen in seconds, not days, right? And so
Yeah.
how do you think about enterprise
One
risk
hour,
management
one
and
day
change?
mortgage.
Yeah, yeah, one day mortgage, right? I mean, who
Yeah.
would have ever thought that if you've come from a traditional banking institution? That seems like incomprehensible, right? I mean,
Yeah.
for anyone that's been through the mortgage process, right? But given that, how does your perspective or your mindset around enterprise risk management shift when you are moving so or able to serve customers so quickly? What are the things you need to think about from that enterprise risk standpoint?
Number one is when you have a lending policy, it should be watertight. It should be so detailed, so prescriptive, so amazing. And our CRO has created one of the most amazingly definitive lending policies. He's perfected it and improved on it, consistently enhances it. Um, that because all of those everything on the piece of paper, which is virtual, on a document, is then translated into rule sets, which are embedded within the system. So it makes your risk process that much more intuitive and system driven. So you're not having to, have a underwriting committee that I've seen in organizations and banks and so forth, which meet and discuss exceptional cases and so forth. That is not done. That is done intuitively within the system as and when we're going through to the case review. Of course, there's an element of the underwriters educating the brokers, which has
Sure.
enabled us to do the one-day mortgage by packaging and getting those brokers to package the cases properly, where 70% of our volumes now are being done in that 1 day category.
Wow.
Of course, when you have exceptional cases and more complex cases, then there's human intervention and involvement and review of the case. But you can imagine if your policy is not good, the rest of it is not going to work. So your policy has to be
Yeah.
excellent, which is exactly what has been developed. Um, and that's number one. And your underwriter, your head of underwriting, director of operations that we have here, he is also, and his underwriters are on top of that as well. So they understand not just what the policy says, but they totally understand what it means from a standard operating procedure standpoint as well,
Mm.
and that has to be definitive as well. So your policy, but then your SOP has to totally align, and that is all related back into the system, and that system then drives the whole thing. That makes sense.
Yeah. Yeah. No, absolutely. So, from like a leadership perspective, as you are, I can, if you think about just traditional environments, like accountability is key to understanding when things break down or there's something has happened, right? And you kind of have this combination of system and individuals, right? Which, in a lot of institutions this is the case, but you're banking on it for your product. So how
Yeah.
do you ensure that accountability, right? And it sounds like a big piece is you start with the beginning of a clear and decisive and very well thought out credit policy, and then you ensure that the individuals are following it, right? But I'd love to hear more about how you ensure that level of accountability.
Well, then the system also shows traceability and auditability. There's a complete audit trail of every decision that has been taken. So there are rule sets, which is within the system. Then every rule has passed for this case to be approved, and it's so beautifully designed that it's all visual. You and I can
Mm,
see it. We can see every case that has been reviewed, all the documents that have been vetted, all the KYC AML checks that have been performed, all the affordability checks that have been carried out as and when the documents are uploaded, that the rule sets are being checked, and you can actually see them going from
like in real time,
from
it's
not being
happening.
passed in real time to
Yeah,
being passed
yeah,
to getting a green tick. The minute you get the green tick, you move on to the next phase, and that's exactly what happens, and that's why we're able to go through all the rules. Any exceptions to the rules, they're flagged, and they're
okay,
immediately it's stopped, or it goes to the underwriter and said this cannot be overridden and you cannot override this rule. So again, you have to have integrity of the system, of course, but also those rule sets must be certified by your head of underwriting, which works very closely with our head of um, credit credit risk as well. So that communication must be seamless, really
yeah,
important to be seamless. And then on top of that, we don't stop there. There's a whole QA process that takes place. There's a whole calibration that takes place. Our credit manager, she reviews all the cases, and we're talking, over 40% of the cases being reviewed on a monthly basis.
wow,
And
okay,
then suddenly you see having an A plus rating on cases is not the exception.
right,
I've been in banks and organizations which will remain nameless where that wasn't the case.
yes,
Where you go into risk advisories or you go into QAs that generate very bad results, and suddenly getting a 2 or 3 A's and a few C's was acceptable.
right,
C's are not acceptable. We're monitoring exceptions to that level of detail. So
that's amazing.
we're putting so much emphasis, and we're being so hard on ourselves to make sure that there are no C's. That's that's unheard of in a manual banking environment.
Yeah, exactly. Yeah, I mean, I'm assuming that some of that ability to be successful is because you can lean into the technology when you need to. You can extract information from documents and get it right, get it accurate, right? You don't have human error that could maybe, kind of mess things up, and it allows for that automation in the process.
Absolutely. But the maturity of our credit risk team and our head of underwriting, director of operations, is also just as equally important. So
Mm,
technology is absolutely fantastic, but if you're not going to have the human interface that translates what
yeah,
is required by the human to the technologist, it's not going to work. So that's
yeah,
the hence the collaboration. The collaborative element within the organization is paramount, is key. The culture of the organization is key to making sure that everyone gets along, from the head of
yeah,
credit risk to the head of underwriting to the head of technology that's making sure that this thing gets done properly and those tickets are raised, and head of engineering who then translates some of those rule sets and makes sure the rule sets go through. Whether it's Isaac, Lawrence, Christina, these guys, and Rob, it's just an amazing team that actually makes this whole thing work. And nobody questions are quashed. Everybody has the right to challenge and raise questions, because the more you question each other, the better the result. And if you
yeah,
have that mindset, that's what makes it a success. That's what makes MQube a success.
yeah, absolutely. Well, and it drives a point that I've had a long belief around, and it's actually our company motto, which is driven by data, guided by experience, right? So it's you can't lean
Absolutely.
into one or the other 100%, but you need to bring those things together. And it sounds like you all have done that successfully at MCube.
It's very important. Everybody has their key successes, and we need to capitalize on those key successes and that experience they have. It's such an amazing set of experiences that we've got working with us, which have seen things go so wrong in some organizations, but
Yeah.
that's how you learn, right? And
Yes.
when they come,
Yeah.
and when we've all come here and we're like, my God, we've never seen this. It's so beautifully done, so beautifully developed.
So going into the technology side a little bit, because this is something I think a lot of the industry in general, not specifically mortgage, but I think just the financial services industry is, how do you think about model risk and governance when AI tools sit at the core of the loan origination? I understand that there are some humans involved in the process, but at the end of the day, there is technology that's helping drive decision making, right? So, model risk and governance are key components of that. So how do you think about it?
Well, of course, we've got the policy in place, the model governance policy. But what we've done and what I've seen it done here, the way the models have been developed and the way the process works is there's an inbuilt self review of the model, of each model. The models that I've seen in the bank, like the ICAP, the ILAP, and the various Monte Carlo simulations for operational risk and so forth, um, that's a world away. They're very clunky. What I'm seeing today and
Yeah,
what we've been experiencing with MQube are documentation, extractions and so forth. What I've learned and been educated by our AI director and our um, you know data director, and what he's educated me about the affordability model. They're very complex. Not only that, but they're they must have the capability to self-regulate and self-test to see that the outcomes that they're generating has a certain level of confidence, which is above and beyond what we'd expect from from the previous generation models. So the
yeah,
confidence level is really important. And how do you drive that confidence level, and that ability for it to self test and consistently learn from itself and improve itself is really important. But of course, the focus really is always on the outcomes. Are the models generating the right outcomes, and they are consistently managed and consistently reviewed? We don't let that just happen without a human interface. We do not let any decision be take place through artificial intelligence. Those decisions must be managed by a human interface for that test to be, for that test to pass, or for
yeah.
that rule set to pass. Does that make sense?
Yeah, no, it does, and it's an important distinction about I think where things are. I think some people when they hear AI, they think, oh, AI is going to be making all these credit decisions, and the reality is, I don't think that's feasible.
No,
Given regulatory environment, but also
no, no, absolutely not.
customer experience, and just the chance, like you still need that human interface. You need the underwriting experience. You need to understand edge cases and how
What
to
does it mean?
yeah,
What does it
right.
mean?
Yeah.
You can get a net transcript sorted out through, whatever. But that was not the discussion in the meeting.
Right. Right.
We've all, right? That was
Yeah.
not what we said. It's completely the opposite of what was actually said. The tonality is not there in terms of the discussions and so forth. And therefore, your notes, or rather the notes that I make in the meeting, become very handy.
Yeah. Those are truth. That's what. Yeah.
So the same
Absolutely.
way, your model must have an a human interface to make sure that the outcomes are properly regulated and properly assessed. And
Yeah.
there's a whole process that is so apart from the documentation of the model, the validation process of the model register, that those are disciplines, of course, that we've seen across everywhere. But what does that mean? Where you can't the way that models were tested before is very different to the way the models are being tested today. Those models that we had in the past, always looking at past events, past regression, past analysis. This is not the case today. So we must make sure that our validation procedures and and also the outcome focus is really important. And seeing a myriad of outcomes that are coming out, we need to make sure that those confidence levels are at 100% or 99.9%. But even that 1.1% is then very easily quantifiable and auditable and traceable to a human
Yeah.
decisioning that is
Yeah.
properly tracked. Does that answer the
And
question? I hope it is.
it no, it does. It does. And often the other piece too, I think, is it explainable, right? Can you explain why this happened, right? And that's,
Absolutely.
yeah,
No
the
black
root
boxes.
cause in
No
it.
way.
No black boxes. Yeah, exactly. Exactly.
That is what got us into a lot of trouble, as in the industry, not us as in you and me, but the banking industry went through a
Yes.
lot of soul searching. I lived through that as well, 2008.
Yeah.
And some of those models and nobody understood and so forth. And that's why we've got model governance. That's why we've got stress testing and all those things that have to come in to place. And that's exactly so we're adopting the best practices, but we're actually improving on some of that and really transformative in terms of, like you said, traceability, explainability. How do you trace it down? And plus also how do you explain those outcomes? And that's also evident in your documentation of the model that describes the model, but also the validation. And your validation is not something to be done once a year.
No. No. No.
So, we haven't talked about the frequency, but the frequency, Matt, is crucial in some of this. How often do you assess? It's continuous, it's continual. It's not something that you check out and you still, you send it to the validation team and then the valid. No, it's continuous because time decisions are being made every single day, every single minute.
Yeah. It's interesting. It's very timely. I just released a blog post about understanding your model deterioration in real time and how like a 12 to 18 month validation cycle doesn't make sense anymore because there's just so many
Model
things change.
drift. What are you
Yeah,
talking about? Model
yeah,
drift.
model drift. Yeah, exactly. So it's like you have to be on top of it, right? And have all those tools and the framework set up so that you can be on top of what's happening, especially when you think about the underlying consumer populations shifting, when you think about macroeconomic conditions, and when you want to scenario test and stress test, as you point out, you have to be very, because things shift pretty quickly today. And so you got to be a little bit more proactive than reactive, which was kind of the older mindset, I think, and that's because what we knew, right? We didn't always have an ability to be proactive because the tools weren't there, but now that has changed.
And you're so right, Matt. And you also must, the AI, our AI director is so cognizant of this. So they've built in these self-assessment tests and checks that come up with exceptions, come up with these things. So it's actually happening in real time as the model learns and as the model grows. So that is really important as well.
Yeah, it's interesting, and it kind of goes into my next question about, when you're thinking about investment, right, from a risk standpoint and making sure, correct me if I'm wrong, you all are VC backed, right? So, that in and of itself creates a different dynamic. I've worked in VC environments, and there is certain expectations, resources are finite, expectations are high, there's a desire to get a return on investment, right? I mean, that's just the bottom line. What, how do you prioritize those risk investments? And it sounds like based on the culture, it's probably an easier discussion than in maybe other environments. But I'd love to hear, going about that prioritization process.
The prioritization process is, again, continuous, but at the end of the day, the main thing is there's no compromise. As far as I'm concerned, from a risk standpoint, there is no compromise when it comes to things like infrastructure security. We're going for an ISO 27001 certification right now, so there's no compromise on that. Risk and compliance is a unit which is not a very cheap unit to run. You've got a chief
Sure.
risk officer, you've got a head of compliance, you've got a head of enterprise risk, you've got an anti-money laundering, unit, an economic crime unit with a couple of analysts surrounding that. So to have that setup, and uh, that's never been compromised. That's been there from day one. That in
Oh,
itself
wow.
speaks volumes to
Yeah.
get it. And for us, and you may be familiar with the UK market, Matt, but to get a regulated mortgage, as post 2008, there's been, if you remember, there was the buy to let mortgages that you buy
Yeah.
and then you rent out the property, and then there's the regulated residential mortgage. We're in the residential space, in the residential prime. So in the regulated space of mortgages, that means that the Financial Conduct Authority gives you permissions to to sell regulated mortgages, which is residential mortgages, so your owner occupied mortgages. To
Yeah.
get those permissions is a big, is not an easy task. And what they want to see, the regulator wants to see that you have in place experience, but
Hmm.
processes, more importantly, processes that are robust, that are, that show rigor, that you can demonstrate to them. So when we sent them the policy suite, then this is, and I joined the firm 4 years ago, and the month that I joined, that was when the permissions were granted. And then within the 2 years post those permissions being granted, we became the top 10 lender in the country, which is a
Wow.
fantastic achievement.
Yeah.
So to do that in a very conservative policy, starting out very conservatively and then gradually building that up and becoming a top 10 lender with one day mortgage is a phenomenal milestone that the organization has achieved. And of course, you can imagine we went from an early high growth sort of regulator, you know, relationship to a stable mortgage provider relationship within 2 years. That in itself showed not just that shows the credibility that we brought to the market, the brokers
Yeah.
community, as well as the customers. But the regulator saw that in us as well. So for them to give us stable, uh, you know, a good report card is fantastic as well. But they look at a lot of things, right? You look at also the complaints level, what's happening on the complaints side of things. You've built these wonderful volumes. How many complaints did you manage and handle really well? So that's another report card. How's your relationship with the financial ombudsman, which we've
Yeah.
managed really well, and thanks to a lot of our operations team, our compliance analysts, they've been able to make sure that we're always on the right side, um, you know, in terms of doing the right thing. So if you show that level of doing the right thing, but you can only show that by actually doing it.
By doing, yeah,
You
you have to
cannot cut
have the
corners on
data,
that.
right, to prove it. Yeah. Yeah.
Yeah, and mortgages is the most one of the most complex retail products out there.
Right. Right. It's, I know in the US, I would consider it probably the most complex retail product. Um, and I think it raises an important point of, as you just highlighted, in order to do it, you have to just get out and do it. And if you're doing it the right way, then regulators, investors, other, people will say, yeah, this is the legit, this is the real deal, this works, you know.
Yeah.
Um, so when you think about, obviously you have a very wide-ranging background. Credit model risk is obviously a big component, but you've also done a lot in non-financial risk, right? Governance, operational resilience, which, are components in my mind of enterprise risk management, but they're not always thought of you've got the financial and non-financial, but a good risk manager is going to have a mind about all of it. In a fintech platform, right, compared to a traditional bank, what does operational resilience look like? As you know, if you think about, you're trying to do all of these things to get the regulator comfortable to appease investors. There are a lot of operational components that can go wrong, right? So what does resilience look like in that fintech world?
Matt, that's one of my that's the area that I'm most passionate about. To be honest, because it's an area that you cannot perfect. You cannot create
Yeah.
analysis that will make sure that it'll completely go away. You don't know what you're faced with. It's one of those risks that is constantly and consistently at play in every organization, whether it's a legal firm or a Subway, you know, sandwich firm. It's
Yeah.
everywhere. So no, that's I'm very passionate about that risk. But what I love the way that we tackle it is really a lot of it is based on your workshops, education. Um, Incident, of course, incident tracking, Zen Hub tracking. We've got that. We got that ticketing system. We got that resolution. We got that time. Recovery time objectives, recovery point objective. Making sure that you understand your business impact, where your important business services are. Number one. Number two, who are your key suppliers? What's your supplier risk? How much are you in touch with those suppliers? How regularly are you in touch with them? Are you talking to them? Do you have connect contact with their key team members that are dealing with you? So if something does go down, they immediately alert you, even when they cannot communicate through the right regular channels for what reason or the other. That's really important, number one. Number two, they also understand the immediacy of what is required. They align with the culture. I think that's really important. But then what does that mean and how do you track that? Well, you really come up with those scenarios, and the scenario testing is crucial, and having those workshops is crucial. I've seen organizations that I've been part of have very elaborate playbooks, but when it
Mm.
comes down to faced with certain incidents that have happened or I have had to go in and manage later after they've happened, that communication is ineffective, or their egos being driven, or their structures which are informal structures which don't enable the right decisioning to take place. I haven't seen that here. I've seen immediate reaction. I've seen immediately coming together, talking about it, dealing with it, getting it done. And I think the reason that it works is because we've gone through that understanding. Like I've had over the last year, I've had like 4 or 5 workshops with our development team, just talking about these different scenarios and what would you do. What are the actions that have come out of those workshops? Have we acted on those outcomes? Those actions. And then has the management listened? And have we done something about it? The answer is yes. So we've taken, that follow up is really important, but
Is
having those
key,
workshops
right?
is equally
Yeah.
important because
Yeah.
no matter how much you write down on a playbook or whatever you want to call it, a business continuity plan, a test plan, and all that stuff, unless you have these informal workshops which are consistent and you discuss these things very openly and honestly, you won't get the right reaction,
Yeah.
and you
I
won't see a
love
continual improvement.
right. And yeah, I love a workshop approach. I've been a big proponent of that through my career. And I also, in addition to running OGMA, I also am a teacher. So I feel like that um, ability to impart knowledge, have open dialogue, get different ideas, because the reality is it's important to have diversity of perspective when trying to tackle these problems because you have people that might have faced something that you've never even thought of because you just haven't dealt with it, and so you have to have those open dialogues and perspectives, and workshopping it actually allows for a smoother execution when it comes time to actually do it. So because I'm with you. I've seen playbooks that sit on shelves, and and then something happens and people break it out and they're like, I don't know what to do here. And
Yeah.
so
What does it mean?
right,
What does this
yeah,
mean?
what does
What is
this
this
mean?
actually saying?
Yeah, what is
And then you've got some head sitting there thinking, no, 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 that's not the way it's going to be done. And this is way. And then they're not listening to the actual problem that is at hand. And that's the problem.
right, right,
So
exactly.
here, what
Well,
we
this has
tend to
been
do in these workshops, like you say, Matt, I just want to quickly say, so we run through
yeah,
all
yeah,
those
please.
incidents that have happened. Just want to run through those incidents that have happened. What have we learned from those incidents? So those incidents get resolved, get tracked, get closed out. But then when we go back to it again through a workshop to say, okay, these are the number of incidents that have happened over the last 3 months, 2 months, whatever. And well, how did we manage these incidents? How did we do this better than we did the one before, the 3 months prior to? So when you do these quarterly workshops, that becomes a historical fact, and you're able
Mm,
to develop. And those workshop reports then get shared by everybody who's attending them, so they're able to learn. So going back to your point, being a teacher, you're actually then I it's my job to make sure that all of those things are brought down in a report that is shared with everybody, that everybody understands, and everybody can then say, look, I said this. This is what I contributed to the workshop. This is what I contributed. So there's an element of ownership. You also create
yeah,
that culture of what's in it for me. What am I doing with this? You know what I mean?
yeah.
So that there is
And
that
it's
ownership,
empowering,
and
right?
through ownership and empowering.
Yeah,
So through that
yeah,
ownership, you create empowerment. That's really
yeah.
important. Anyways,
No, that's great. That's I could keep talking for another couple hours with you. Unfortunately, we're coming to the end of the episode, but have really loved kind of this what I would consider very grounded discussion, even though we've spanned, AI native decisioning and understanding the human element and how we need to ensure those are key to it, to operational resilience, governance. Just been a great varied amount of topics. But before we leave, I'd like to just get your perspective on what capabilities that future CROs and heads of risks, that they might need to, in the future that aren't emphasized enough today.
yeah, I'm going to go back to the point that you raised, which is diversity. You talked about it and you mentioned it, and I love what you just said, because unless there's diversity in thought and acceptance of differences in opinion, you
Yeah,
cannot move forward. And what's really going to matter in the future, or has not necessarily in the future, it's happening right now, is the time factor. We're no longer bound by time. The time is not, that used to be a constraint before. It's no longer a constraint. So if you're living in a timeless environment where where it's happening as we speak,
yeah,
you cannot rely on, okay, I will do this when the next committee takes place,
yeah,
right?
right.
That has to shift. You must embed risk within understanding time, the timelessness of situations, understanding that you got to take action there and then. You've got to be learned, you've got to be educated. You need to be able to learn as well, and not just impart knowledge, but also take in knowledge. And there's no such thing as one specialist. I think we can all be learning from each other and understanding everybody's experiences, and how we can actually create the most beneficial outcome with that knowledge. I hope that answers the question.
Yeah, that's perfect. Yeah, no, it reminds me of something an old friend told me years ago, which was always remain teachable. And I think that's how, so if you continue that cycle of remaining teachable, but then imparting where you can, it creates just a good foundation and a good culture, right? Which you all are seeing at MQube. I think, and look forward to
It's a
seeing
great place.
what you all, yeah, and what you all continue to bring to the market. So thanks again for joining me on Inside the Margins, Raza, and we're
Thank you for
talking to you
having
again
me.
soon. Yeah, my
Thank you,
pleasure.
Matt.
All
All right.
right,
You
take
take
care.
care. Bye bye.
Bye bye.
Bye bye.